I'm Alan Kenny here at Nareit's REIT World. I'm joined by Ben Shaw, President and CEO of Seritage Growth Properties. So Ben, how's leasing activity looking right now, and what kind of releasing multiples are you seeing?
It continues to be very strong. We've accelerated our leasing activity this year. We're now up to about 4 million square feet of space that we've leased over the last 2.5 years. On average, in terms of the multiple uplift that we're achieving, it's averaged about 4 times. So we've generally been able to take our existing Sears rent at $4 a foot and take it up over $18 a foot as we're putting new tenants into place. We've been able to achieve these results across a wide breadth of assets, both on-mall, off-mall, primary markets, and secondary markets. And we're on the cusp now of launching a series of our premier assets that we expect to achieve even greater rent multiples on and unlock value for shareholders.
And obviously redevelopment is a big part of your strategy. How is that pipeline looking right now, and are there any specific, maybe geographic markets that you're focusing on?
We continue to build up our redevelopment pipeline. So as of the end of the third quarter, we have 70 projects that we've completed or commenced, about $740 million of capital. We're deploying that capital at 11 to 12% unlevered return, so relatively attractive rates. As I mentioned, we're increasingly focused on some of our larger scale projects, and 3 that I'd highlight in particular. One in Santa Monica, where we recently completed interior demolition of that freestanding building. Second in Aventura, Florida, where we're about to commence demolition of the building there. And then third in La Jolla, California, where we expect to commence construction by the end of the year.
And lastly, what are some of the tenants that you feel are your biggest drivers of traffic to your properties, and do you see that changing at all going forward?
We continue to see strong demand from growing retailers for our properties, primarily driven by the high quality nature of them, as well as our ability to put together multiple uses in one setting. In terms of types of uses, we've continue to be very, very active around entertainment, food and beverage. That's been about 40% of the 4 million square feet that we've leased. Off-price continues to be active. That's about 20%. The home category is about 15%, and the remainder of the space is generally in the service or everyday use arena. We're also seeing opportunities around mixed use and combining those mixed uses with our retail setting, and particularly residential, with a focus on creating environments where we can combine residences, entertainment, food and beverage all in one setting.
Well, Ben, thank you so much for your time.
Thank you.
For more on this and other real estate news and analysis, be sure to visit Nareit's website, REIT.com.